All right, everybody. Good morning and welcome back to another live stream. Good afternoon, wherever you are in the world. Thanks for being here. We are back for another session, of course, taking a look at markets and trying to close out the year. We've only got a couple trading days left in 2025, at least on the stock market side of things. With the holidays coming up, there are some days off in terms of market activity. That should be interesting to see, but let's just take a little bit of an update in terms of where we are. 2025 has been an interesting year. It's been a very impressive rebound year from the stock market. You had, when this whole thing happened with the tariff tantrum, is what they're calling it nowadays, I guess. The whole tariff freak out that we saw back early this year, it's interesting because now you hear very little about tariff worries and things like that. That story was so loud and so worrisome to the market, and just in time for sentiment to get so bad, and then the administration kind of walked back some of the worst case scenario stuff, and the market proceeded to just rip for pretty much the rest of this year. We have had very little, if any, substantial pullbacks for most of 2025 outside of the big one, right? So you had the big one, where this was a really good size dip. This was beyond what your average dip usually is. I think the average that you're going to get, and this is just off the cuff, check your own stats on this, but I think you usually get somewhere around, I know it's expected you're about average, you get 10% pullback per year in the S&P 500. So to see a 21.5%, let's call it, drawdown on the S&P 500, we had a pretty good little sell-off there this year. Then we had this move here. I don't think it was quite 10%, but So S&P 500 went down 6% here. The NASDAQ on this one, I think, did tap 9.5 or something. Yeah, 9.3 pullback on the NAS. So you've had some pullbacks this year, but man, has it been few and far between. And I gotta say, this type of year is very difficult for most trading styles. I'm just curious if anybody wants to be honest with the chat here. It's a safe space. On a scale of 1 to 10, like 1 being a difficult year, 10 being an excellent year for you, how has 2025 been for you? Be honest. Because different styles, like here's the thing, right? If you trade trend following, if you trade mean reversion, if you trade Fibonacci retracements, breakouts, smart money concepts, fundamentals, macro, sentiment, whatever you trade, take your pick. Some years are better than others. Like 2022, disastrous for me. 2022 was a horrendous year for me. I lost money on the short side and on the long side in 2022. My worst trading year after becoming profitable to date was this market environment. This destroyed my trading strategy. I was down 31% in 2022 as someone who had already reached profitability in trading. That will humble a man, okay? Nothing humbles a man or woman like a 31% drawdown after reaching success in trading. And guess what? The best traders of history, best investors of history, have seen multiple 20% plus drawdowns. Unfortunately, it's part of the business. If you've had let's say that you've been profitable for the last 5 years, your 6th year in trading can be a red year. That sounds like a foreign language to people who are new to this stuff, but it sounds eerily familiar to profitable trading. Because profitable trading and investing does not mean every year is green, every month is green. Okay? Okay, let me review some of you guys' results. So we have a couple zeros. Let's make, hey, you know what? You know what, Chris and Zor too, people who said 0, you know what? You can't get any worse than 0. Actually, I guess I can. Let me take that back. You can always lose more money, so please be careful. But if you had a really tough year, again, 1 through 10, 1 being a tough year, 10 being an excellent year. We have some 5s, 5.5s, 3s, 8, 6, 1, 5, 7, 6, 7, 6, 7. Okay. I think for me, 2025 has actually been a very good year for my personal trading strategy. Again, I mentioned like a year like 2022, I would give that a 1. As a profitable trader, that year sucked. For me, for my style of trading. For other people, they might have loved 2022, right? The market environment is not just like blanket statement, good or bad. It depends what strategy you're using. But 2025 for me would probably be an 8. It's been a really good year for me. Because of the style of trading that I personally trade, which may work terribly next year, but it works really good this year, is trend following. So, trend following can be amazing and it can be terrible. Okay, so let's just take, for example, I'll show you this. Let's say that we do just one of these moving averages. Okay, so this is the simplest strategy in the world. Let's just say that you buy when this thing closes above and you sell when this thing closes below. Okay. If you had sold when this thing closed below, held, take a profit there, go long. Oh, then you lose there, right? Held, really nice profit. And then you got long here, held it all the way through here, closed, got short, little loss there. Oh, back above, long, really good profit. What you can see here is that in this market, that strategy is dominant, okay? Trend following in this year's environment was dominant. It was excellent. It was a great year for trend followers who let winners run. Again, let me show you 2022, same concept, not so great, okay? 2022, not so great. Because I'm very reluctant to short markets. It's a tricky trade because shorting is very different than going long from a swing trading perspective in the indices. They move differently. Shorts are very quick. And so my style of trailing stops tends to be, just in my back testing, is not as successful on the short side. Anyways, you can see that the winning trades on the long side were very, kind of brief. So I had like this one, that's a good little move. And then we came back, gave back most of the gains, right? Over here, went long, stopped out, right? Went long here, stopped out. You can kind of see how 2022 was a terrible year. Same strategy, totally different results. You see what I'm saying? This is what people on YouTube will not show you, is you'll watch on YouTube, for example, people will show you a strategy that's working excellently right now, but they won't acknowledge or discuss the idea that trading systems and strategies don't work all the time. Nothing works all the time, right? Lots of questions in the chat. I'm going to try and just speed run them, but I got a lot of charts to look at, so apologies if I don't get to your question. What is the Fed ending its balance sheet runoff as early as December 2025? I mean, Fed is they're starting their QE stuff. They are pumping money into the system. That's the overly simplified. Started this year in May. I found your channel in June, and since then it's been a joy trading gold in a range and later a big uptrend 5K profit. Nice, Jacob. Very, very well done. Fed Waller is speaking and just said rates need to go lower. Yep. The Waller is back in the running, by the way. I think he's getting interviewed by the president for the job of chairman. I discovered Nick through AI. That's pretty cool. Thank you to the AI overlords for introducing us. Yeah, let's take a look. Let's take a look at some charts. Jumping in here. Update on my position on the NASDAQ. Nothing to say here. I've still got my stop loss locked behind this 50% retracement below yesterday's intraday low. I am looking for, if this thing wants to keep running, excellent. If this thing wants to roll over, taking profits. Simple as that. Next chart. S&P 500 seems to be trying to hold support around 6,800. I'd have a little bit more concern if you have a failure that actually breaks and holds. You can see we've had a wick below this level, but no closure below that level, at least for now. Overall, S&P 500 has honestly been pretty range bound. It's been pretty choppy. Big picture stuff, you've had a sideways market here for a couple months. Really not a lot of gains or losses despite all this stuff. I mean, I'm long NASDAQ, but you can see the market environment has changed a little bit in recent times. We've gone from this kind of clean uptrend where every little dip got bought into to this more challenging trending environment where you've had these types of just back and forth indecision in markets. So, your market environment matters a lot to your trading strategy. I cannot emphasize this enough. Traders will make the mistake over and over and over. I've done it myself many times of thinking that their strategy is God tier, that it's incredible in the right environment, only to find out that when market conditions shift, their strategy stinks. Nothing works all the time. Embrace it or get beat up by it. It's your choice. Dow Jones. Dow Jones here. I actually think I'm staying with this theme for 2026. I think that the tech dominance, I still think tech stocks will likely, until the trend breaks, tech stocks I think could do great. I think that you have room for things like the Russell, things like the S&P 500, the broader list of stocks. I think they can actually have a decent year in 2026. I think, for example, I'm bullish on the RSP, and I haven't been bullish on the RSP in a long time. But this chart actually looks like we've broken above consolidation, that the average stock in the S&P 500 may actually have some room to run. Why do I think that? Well, it's because I think that the Fed's going to cut interest rates. And I think that the Fed is going to pump money into the system. They're going to do QE. It's their one strategy. When things look a little rough, what do? They pump money into the system. And I think that disproportionately favors a few areas. I think that favors silver and gold, which continue to be monsters. I think we're going to get rate cuts, so I think that gold, silver should do okay. I think that, until proven otherwise, the market's in an uptrend. So where do I want to be? Well, I actually really like dividend stocks, and I like sort of some of the more decently valued areas of the market that I think have been a little unloved. I'm talking about dividend companies. I'm talking about the Russell, which I think actually has some momentum here, right? Small cap companies, which are not necessarily the big AI names, right? I think they actually have room to maybe have a decent year in 2026. Maybe tech goes sideways for 6 months and small caps are up 20%. Now, I have to call myself out. I've been wrong about that idea of the last few years. I've thought the Fed was going to cut rates, but they have, just very, very slowly. But I think that if you get the tricky part here is the labor market. We know the labor market's not good. There's no question the labor market is pretty dead. There's not a lot of hiring going on. Now, the question is, does it get worse from here or does it get better, right? Does the labor market show, are we going to go into negative territory where it truly shows like, okay, we might actually be going into a recession? If you have mass layoffs pick up, then that's a different environment where I don't necessarily want to be long the Russell. But if you get hiring to slowly start to repair itself into a rate cutting environment and the economy holds up okay, the Russell looks pretty sweet in that environment, in my personal opinion. I'm not saying necessarily I know that's what's going to happen because this stuff is very difficult to predict. But generally speaking, that's like my base case for 2026. We'll see. Of course, anything can happen. But for now, the trend seems to be okay for the Russell. I like the idea of pullbacks on this one. I actually like where it currently sits, but I wouldn't mind a little bit deeper of a pullback into this area here. So I'm watching the Russell for some possible longs with small size and a stop loss as a trade. I'm long the NASDAQ with a stop loss below yesterday's low. If that breaks lower, then I'm out of that trade. Gold, I'm still in this trade. Moving averages still look nice here. You've broken to new highs, at least in the last few months. We are still eyeing that prior all-time high. Let me clean up my chart so we can see this a little bit here. So gold is, by the way, I think gold is the top rated asset on the Edge Finder right now. Let me check. Gold is the highest rated asset on the Edge Finder at this time. Once we add in the new labor statistics that are coming, ADP, JOLTS job openings, and unemployment claims, this is going to actually even have a higher score because ADP was rough and unemployment claims are rough. So gold is about to be the highest score on Edge Finder, undisputed. So gold continues to be one that I really like. Edge Finder idea here for gold has been phenomenal this year. We've had bullish readings for most of 2025. Very few. There's only one time I can remember where gold had a bearish rating on Edge Finder all year long. And I'm very glad about that. That's been the correct call. Using the economic statistics, gold has been getting considerably decently high scores in Edge Finder for most of 2025. What's currently bearish in Edge Finder? Let's take a look. Got to scroll down here. Pound Aussie, dollars are, pound Swiss. That's pretty much it. Wow, we have very few bearish setups right now. So yeah, when it comes to silver and gold both getting bullish ratings, I like them quite a bit. Gold, I think, really wants to take out those highs. I think there's a good chance that we could see, if trends continuations here, if the trend continuation happens here, a break above here is exciting. I think you have potential for that to be another sort of runaway move. And how I'm going to manage this trade is simply this. I've got my stop loss here. I'm looking for any sort of higher low to move my stop loss further. So if we got like this kind of move, that is going to be an opportunity for me to trail that stop. But I'm holding on loosely to it. What I mean by that is I don't necessarily need to, put my stop right here. I can be perfectly fine with if gold wants to come back for the next few days and then start to move higher. I'm not in a rush to get out of this trade if it doesn't immediately continue. We have a really solid score on Edge Finder. I feel very comfortable holding this long position. Again, that doesn't mean I know it's going to go up in the next day or two. It could come down for a few days, but I'm going to stick with the trade unless we fail to hold 4,200, right? So 4,200 is my line in the sand. If that happens, I take profits on the move. And if we push through these highs, then upwards and onwards, I keep trailing my stop loss. So I like gold. I like silver. Silver is just an absolute monster, guys. I don't know what is gotten into silver here, but it is a absolute beast of a chart here recently. Very little pullbacks even, right? You've just had these 1 day or couple day pullbacks, like one little push down and then boom, bulls came in. One push down, bulls came in. Intraday reversal here. I mean, this is a clean chart. That is what a trend looks like, right? Now, again, that ends at some point, but for now, trend is just killing it here. So I think, if I'm long silver, for example, I'm not, but let's just say I'm long silver here. If I was, I'm just trailing stops behind these kind of key spots where you're finding sharp reactions to them, right? So if we had this move happen, boom, like that, trail stop further, It happened again, trail stop further. And the reason I like trailing stops is because I actually find day-to-day price action very difficult to predict. And I try not to do it. I try and just to trail stops, because trailing stops, the beauty of trailing stops, there's pros and cons. We talk about it over and over on the show, but the pros of trailing stops are that you take out some of the prediction. And that is what gets traders into so much trouble, is trying to predict every single day's movements, right? I can't tell you with 1 day accuracy where the NASDAQ's going, because we could do this, and then we could do this, and then we could do that. Like, I can't, that game is so difficult to play that I choose not to, right? What I mean by that is I have a really simple little methodology that I use for trailing stops that I love. When you get an RSI, a 4-period RSI like this, I mark that zone. Those are where my zones generally coincide, is where you have these sharp reversals, right? See that? It's nothing magical, but I use those areas to generally give me an idea of where to trail my stops. So this area clearly is showing, by the way, like this level has been huge for a while. Take a look at this level, right? It has been respected both sides of the bull and bear thesis. See that level? Like, look how critical this line on this chart is. Those are the levels that I like to watch in my trading. So when I trail a stop, I say, okay, look, we broke above that area. If that level fails, I have to be a little bit more cautious and have to get out of the trade. So that is how I will use a critical area, not to predict what price is going to do next, but to react to what it does. So if NAS, which I have a bullish reading on EdgeFinder, I like the setup. I've done well in this trade, but I don't know where it wants to end. If it wants to fail here, if it can't hold this support level, then the market has told me, all right, trade's over, out of there, take a profit. And if this thing erupts through the highs, right, which could also happen, if that happens, great. Look for the next spot. Let's say we get this kind of move here. That stop loss is going right behind that new pivot. See, what I like about this is that I am just reacting. I know what I'm supposed to do with my positions at all times. There's not a flurry of emotions every day that I get to the charts. Trading is meant to be boring. Find a way to make it boring. Or, and by the way, do you know what makes boring, what makes trading boring faster than anything else? Sizing your trades appropriately. If you're risking very small per trade, guess what? Trading becomes boring real quick. And that's how it's supposed to be. Nick, you should do some monthly giveaways for a watcher for the EdgeFinder. Chris, thanks for saying that. If you want future giveaways, we're not doing one right now, but the best way to get into giveaways, like free giveaways for EdgeFinder, we do them periodically. I don't know the next time we're going to do it, but the next one that we do always gets dropped in our Telegram channel. When we do giveaways, it's exclusively in our Telegram channel. So if that's something you're interested in, if you want to join our Telegram, by the way, I mean, you should join it anyways. If you're not in our Telegram, it is free to join. Let me show you this really quick. Let me pull this up here. So inside of the Telegram, I'm updating people like the gold trade that I'm in. And then we have Alan from our team who is putting out content each and every day about macroeconomics that are moving the markets now. If you're not in our Telegram channel, 100%, take 2 seconds to join that for free. You can scan the QR code below my camera or click the link that just got dropped in the chat by the producer. Thank you very much. Join the Telegram, because if you want future giveaways, if you want free analysis, updates on ideas that we've got, I mean, Telegram is the spot to be. That's kind of like our center to where all the content stems from. So if you really like the show, 100% make sure you're in the Telegram as well. Or the Discord. If you prefer Discord, we share the same content in our Discord server as well, which maybe we can drop the link to that as well. So let's move on to some more charts here. I've got about 6 or 7 minutes here, so let's see what we've got. Already talked about gold. Oil's an interesting spot. It's sitting at a long-term level of support. Watch this area. I'm not necessarily interested in any trades on oil. I don't like the chart for any bullish or bearish setups. I also don't have any confirmation from Edgefinder. I think it's pretty mixed. Let me just check oil. Yeah, US oil has a -2 score, so it's really not a setup for me, but watch it from a barometer of economic activity as well as inflation. Lower oil prices are good for inflation. They lower the cost of transportation, which helps the inflation story. But if oil prices move down too far too fast, that could signal a significant lack of demand for crude oil. In economies that are growing, the demand for oil should be growing too. Right now, I think you have, somebody asked me a good question. They say, you think this is more related to supply issues or oversupply of oil? There's tons of oil production going on in the world right now. Or is this more a lack of demand? And I think it's a bit of both. Like, I do think you have some slowdown in the global economy. I don't necessarily think that means we're global recession terrible, but I think the economy has slowed in places, and that's probably why central banks are cutting interest rates. And so I think demand has slowed a bit, and I think supply is up. So oil is a tough one for me to really get behind in terms of any setups at this time. So I have no trades on oil. If I had to take a position, it would probably be on the bearish side. I just don't have any reading from Edgefinder. Trend is to the downside, but watch this level. If you can get the bulls to hold this area, that would actually be an optimistic thing in terms of global economic performance. So I'm going to keep an eye on it. Back to our top setups here for just a second. Dow Jones, I already looked at a bunch of indices, so I'm going to move on from that. Euro pound, so I'm long euro pound. I took a partial profit on it already. I have a second position running, but we look really good here. Euro pound was an Edgefinder idea. I bought the dip on this upward trend line and major level of support. This chart looks really good. I still think it has upside. I actually was short euro pound up here, took profits on it, and then reversed the trade, got long. So yeah, I like euro pound to the upside. I think it's got a +5 score, so it's bullish, but it's not incredibly high score on the Edgefinder. But still, I like the trade. So may choose to take the second position off, take profits on the rest of it, but I'm going to continue to watch that chart. That's high up on my watch list right now. On the bearish side, only a couple charts here actually getting bearish readings. And what I like to do is when I'm just doing this off camera, what I do is I like to remove the neutral readings from Edgefinder. And this is pretty much my watch list. Specifically, what I could do is I could also, I don't really trade platinum, for example. So outside of platinum, this would be my watch list for the day. So Kiwi dollar, I could check on that one, see what's going on with Kiwi dollar, NZD USD. Let's just pull that up. So NZD USD, I am looking for longs on a pullback into this area here or a breakout through these highs. Both of these look like setups for me. I continue to be pretty bearish on the dollar for now. Let's see, pound Swiss, dollar ZAR, pound Swiss. Let's just see what that chart looks like. This one, I have a tough time shorting anything that has Swiss in it because it is so costly to do so. The swaps are very expensive to short or to go long Swiss franc. When you're short pound, long Swiss franc, that's going to give you a pretty costly carry trade. Pound Aussie. Pound Aussie, this one actually looks like it has more downside here. The trend longer term still looks to the downside here. Though I think I like this from a resistance zone here. So either a pullback up into this region or a break through those lows. Both of these look like setups that I like quite a bit. But let's see if we can actually get one of these levels. I think right now, for me, you're just sort of in no man's land. So I'm either looking for this retracement up into resistance, looking for that short. But again, I mark out these ideas, and I do this every day. What I just did, that's my daily task with Edgefinders. I go through this list. So what I'm looking for a trade is really simple. I'm looking for this reading to also match up a level on the chart that I like. Some traders, what they do with Edge Finder is they'll do this, what I'm doing, and then they'll mark alerts on their chart to come back to that and watch it. Just given that I'm staring at this stuff every day on live streams, I don't necessarily need to use alerts because I do this every day all the time. But that's the idea, right? Is I mark up my levels, and then I check back each day. Hey, is Edge Finder still giving me the reading? All right. Are we at a level? All right. And if the answer is yes to both, I usually will take a trade. So yes, that's Edge Finder practical. You know, you can, if you want to spend 30 minutes a day at Edge Finder, a lot of people do, you can certainly do that. The utility of Edge Finder, though, is that you don't have to. Like, you can come to top setups page and get a macro fundamental summary for your favorite charts. Look at what we're watching, right? We're watching PCE, PPI, CPI, retail sales, PMI numbers, GDP statistics. We're watching the commitment of traders data to see what institutions are doing. The Edge Finder's monitoring a ton of stuff, generating a watch list so that you can kind of combine it with your own technical strategies and find more insightful trades. That's the idea behind Edge Finder. That is why we have thousands of people using it all over the world. And if you want to be the next one to use it, now's the best chance all year long to get it. Our holiday sale is currently 40% off. But if you're watching the stream right now, live stream viewers get 45% off. And for rest of the year, we're offering payment plans for people who need to get access to the Edge Finder. We are aware that the sale discount is excellent. However, some people are still, hey, you know, the holidays are tight. I totally get that. And so we're offering to do payment plans and to split up the cost into multiple months for people who need that. So for people who are like, hey, I want to split it up into 2 payments, can I do that? The answer is yes. All you have to do is send a direct message to our support staff using the link in the live stream chat. And maybe, James, if you don't mind throwing up the QR code as well. If you scan the QR code that is below me here in just a second, there it is, or the talk to one. If we scan the QR code, you can also be connected to a real person on our support staff. There you go. Just scan that or click the link in the chat or in the description to speak to a member of our support staff to take advantage of the holiday discount. It's the biggest sale we do all year long, and split it up into payments if you need to. Okay. With that said, guys, up next, we have our next show host. You guys know him and love him. It is Marco from Marco's Trading Journey, going to go over some trade setups and ideas that he too is watching. And one thing I would say is that, you know, this has been one of the coolest things. We have content creators and traders, trading content creators who use Edge Finder, and everyone uses it a little bit differently. So, you know, whether it's Marco, whether it's James, whether it's, you know, Prop Firm Kid uses the Edge Finder. We have all these different people who use Edge Finder, and no one uses it exactly the same. And that's kind of cool to me. You know, it's a data screening software. And so, you know, there's your personal style gets added into Edge Finder. And, you know, hearing from different subscribers who use Edge Finder and different traders who use Edge Finder is not really a one size fits all. It's a screening tool. It helps you to scan a bunch of data, but people have different styles and ways of using it. So I think that's very cool. So maybe you'll see a little bit of that if you stick around, if you want somebody else other than myself talking about how they use Edge Finder. Check it out just after this quick break. Stay tuned. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the live stream. So I hope everyone is doing well. What is my main story for today? The thing I want to talk about the most is gonna be the Bank of Japan interest rate decision. So I've been researching it, thinking about it, and it's gonna be pretty important for the markets. If we flip on UJ, you can see that the expectation is for a rate hike. So it's gonna happen on Friday my time, but it's most likely gonna happen on Thursday at 10 p.m. New York time. And the Bank of Japan is the only central bank that does not announce the exact time of the interest rate decision. So they're the only central bank where you get the tentative basically words in the Forex Factory calendar. So what is the expectation? Expectation is that the previous number is 0.5 and the new number will be 0.75, so that they will hike interest rates. Now, why is that important? It is very important because of the carry trade. Okay, a lot of investors implement a carry trade, which is a bet where the interest rate of the yen is very low. And for example, the interest rate of the dollar is very high. So we can go to, for example, the carry trade scanner, which the Edge Finder has. So carry trade scanner, and you type in USD JPY. You can see the base currency rate is 3.75. That's for the dollar. You can see the quote currency rate is 0.5. That's for the yen. The divergence is 3.25%. Carry direction is a buy. So if you buy the dollar and sell the yen, you get an extra 3.25% in interest. Well, that's kind of in theory. It's not the exact number, but essentially you get 3+% every single year. Now, 3+% for kind of for free is pretty good. It's not a bad deal. Like keeping your money in the bank, you basically lose money. While keeping your money in, let's say, this type of a carry trade, you can make 3 extra percent per year. So investors love it. Everyone knows about it. But then there is a problem. What is the problem? The problem has been that Japan, Bank of Japan, has been steadily increasing the interest rate. So if we go to the let me see, where is that interest rate data? Interest rates. And you go to the JPY. You can see they went from negative rates to hiking rates right now. If they continue to hike, maybe to 1%, the carry trade, here, so the carry trade loses power. That means people will start to possibly sell the dollar and buy back the yen. That means this chart could go a lot lower, okay? And in general, the yen can gain a lot of value while the dollar can lose value on that sort of a scenario. So I'm closely watching the event. I thought about executing a position. I don't think I'll do it if I do execute a buy setup on UJ before the event, because my thinking is, you know what they did last time? So in December 2024, they announced a hike in December, but then they skipped. So they announced a hike, but they didn't do it. The market reacted dovishly in terms of Japan, and UJ went up. So I'm thinking maybe this December they are signaling a rate hike, but maybe they will skip it and maybe they will actually hike rates in January. So that's my bet. I'm thinking of getting in on a small buy position, like really low risk just before the event. But I'm unsure. I'm not sure. I don't want to force a trade. I don't want to take a trade just because I'm bored. I don't want to take a trade just because I'm flat in the markets. That's a really bad reason to look to execute a trade. So currently, I'm not going to do it. So as I currently stand, I'm probably not going to do it. But there's a small chance I may execute it. And of course, if I do take this position, you will be notified in the A1 Trading Discord. If you want to join the A1 Trading Discord, get all of my trade signals, you can do so with my discount code Marco. So you get trade signals, trade analysis, fundamental event breakdowns. You get to talk with other profitable traders from our community. We have a lot of them. And you get Nick's signals, Chris Pulver, iWind. So you get a bunch of stuff. It's an awesome value for the money, in my personal opinion. So that's my main thing for this week. I was looking at the NFP. NFP came in a bit mixed. So Here, NFP came in a bit mixed. The unemployment rate went up. So that was not sort of, it was kind of a nothing burger, if you ask me. It didn't really swing the USD bias bullish or bearish. It just kept the bias the same. That's at least my take on it. Some other stuff that we had was the manufacturing PMIs, services PMIs. Manufacturing came in a bit lower. Services came in lower as well. There wasn't really a big reaction on the dollar, if I'm being honest. Then we had the UK CPI print, which came in quite cooler. You can see the forecast was 3.5. Actual number was 3.2. Interesting. So if we go to the inflation for the UK, let's see, it's kind of going down, which for their economy is good. For the pound is not good, because for the pound, you would like the inflation to be higher so that the central bank needs to hike interest rates. So if you go to the UK economic heat map, you can see that the latest release, the CPI, is actually bearish for the currency, bullish for their stock market. So that's the latest development. Let me check if there's anything else that's going to be super important for this week. Yes, of course, the Bank of England monetary policy decision, the European Central Bank main refinancing rate, the US CPI. So we're actually getting the US inflation data. And of course, the biggest impact for this week is the BOJ policy rate. As far as my watch list goes, I have just two things right now. So I have the NZD/USD. I did take a buy position, which was a nice winner. I'm looking to possibly re-enter this position. I'm looking to get back in because I still love the story surrounding the New Zealand dollar. So what I love about it is I love that the RBNZ has switched from being dovish, from cutting, to now being hawkish. I can quickly show you that. So if we go to, for example, NZD interest rate, New Zealand interest rate, you can see they cut by a significant amount from 5.5 to 2.25. That is a significant amount. And now they have announced possible higher rates in the future. So they have announced possible rate hikes in the future. So I like the NZD. For the US dollar, I don't have a clear bias. No, that's a problem. I'm not fully bearish on the US dollar. So that's one of the problems I have, because when you trade currencies, and if the currency is attached with the US dollar, you need to have a bias on the dollar. It just gives you a lot more, let's say, it gives you more high probability trades. And right now, I'm a bit uncertain when it comes to the US dollar. I don't think it's going to go to 95. I know some people were calling for DXY to 95. I don't think that's going to happen. We have 2 rate cuts priced in for 2026. I don't think 2 rate cuts will happen. I think 1 rate cut happens, maybe even 0, because from my research, the emphasis has shifted from lower rates to actually inflation. Inflation is pretty high in the States. I mean, pretty high. It's definitely above target. It's 3%, and so that's why I'm awaiting the print. Where is it? Here. I'm awaiting this print on Thursday, the CPI print, to see what is the inflation doing. But it's elevated. People don't like it. They don't really care anymore about the interest rate that much, but they definitely do care about their purchasing power. That's at least from what I saw from my research. That scenario is more bullish on the dollar than bearish. So I'm a bit unclear, and that makes me a bit hesitant to buy NZD/USD. What does the Edge Finder say? Let me see the top setups. NZD/USD. Bullish reading right here, so that's definitely nice. Extra confidence for me to buy. Game plan is, if NZD/USD can pull back a bit more, maybe hit the 20 EMA, maybe go to, let's say, this level of support, I'm going to most likely take a buy setup. So with a tight stop loss, because I think the central bank story around New Zealand dollar is very bullish. So I want to have some skin in the game. I want to try to get in, and that's the game plan. Actually, let me set an alert. So let's see around here. Yeah. So alert is set and possibly considering entering right there. What is the USD CAD doing? Let me check that one out, because the CAD is definitely gaining value. Still looks pretty similar to what I've seen in the last couple of weeks. UJ, I have UJ on the watch list because I'm considering going long into the BOJ. So I have it on the watch list, but it's not, I'm probably not going to take it. There's just so much uncertainty. The BOJ, very tough to read, very, very tough central bank. I mean, they don't even announce the time of when they will have the policy rate announced. So they don't even give you the time. That's who you're dealing with. Just so you guys know, or that's who we are dealing with when you're trading the yen. I do want to take this time, since we are kind of in the middle of my segment. I want to take this time to talk to you about the sponsor of today's video, which is going to be DNA Funded. Okay, so DNA Funded, great prop firm. If you're looking to expand your trading capital, look no further. So they are ran by professionals. It's not a kid in a basement. They're not going to disappear in 5 to 6 months. They are one of the main competitors to let's say FTMO 5%ers, E8 markets, or I think that's the name. So they are legit. They are backed by a big broker as well, which is great to see. But the best part about it, two things. First thing, you get 25% off if you use our code A1Live. So A1Live gets you 25% off any challenge. Okay, that's the best part about it, because when you look at all of the reliable prop firms, this is the cheapest one with our code. So that's great. But also, they use TradeLocker for trade execution, and TradeLocker, in my opinion, is the best trade execution software I have ever used. Usually, I have to, for my MetaTrader, I have to do some, or all of the calculations are through the MyFXbook calculator. But TradeLocker has this built in, so it saves me like 5 minutes for every single trade that I take, which is awesome. This is my personal account, 50K two-phase funded. Currently in drawdown, unfortunately. 2 positions running. Selling UJ, buying the SPX. Both of them are in the red, unfortunately. But it is what it is, part of the game. By the way, this challenge is purely traded by ChatGPT Trade Signals. It's a challenge I'm doing for my YouTube channel. So far, ChatGPT passed phase 1, passed phase 2. Now it's the funded stage. We got some drawdown. It is what it is. So A1Live, 25% off. Now let me see what you guys are saying. So let me open up my comment section. Let's see. Gold, sure. Yeah, we're gonna cover gold for sure. Actually, let's cover gold right now. So for gold and silver, whoa, okay, I didn't even see this. Gold and silver are flying higher. So that looks great, especially silver. If I'm going to choose something, I'm going to choose silver. The main story also is silver is a big industrial metal. So silver is used, for example, in solar panels, I believe. And solar panels are or have been becoming a lot more popular in the last decade. So to produce solar panels, you need silver. Silver has a huge demand from like a huge industrial demand. Gold, not so much. You know, gold is more of a niche thing, not a niche thing, but it's for jewelry, for investing, for fancy stuff. But silver has a lot more things you can do with it, right? So silver, there's always going to be a massive demand for silver, especially with the solar panel story. I love it. I want to buy, but I'm not the one to chase the highs. I'm not the one to chase the price. I'm the one to get in on the pullbacks like this one or like this one, which I already had a few attempts, but I never managed to catch that huge winner in 2025. So had 2 winners, but did not manage to catch any huge uptrends. And again, my strategy, it just does not allow me to buy right there. It just, price right here doesn't look good to buy, in my opinion. Yes, it can go on for 10% more. Let me also quickly see the edge finder. Bullish, and gold, very bullish. Okay, gold is even better. So yes, it can go another 10%, but if it does, it's gonna go without me. Gold looks a bit better because it's not at the all-time highs. It's still below the all-time highs. And I would actually consider maybe buying it if we get back to the 20 MA, but looks like it's not going to happen. So it looks like this train has left the station, but I'm definitely bullish. So summary is I'm bullish on both. I'm not looking to buy, or I'm looking to buy, but on a pullback. So I'm looking for a discount. I'm looking for a cheaper price. I'm looking for a better reward to risk. If you buy at the highs, especially if you buy at the all-time highs, your reward to risk is very bad. You can't have a tight stop loss because there's a high chance price is going to pull back and take you out. That's about it from me. Let's see. Marco, what's the indicator that you're using the lines on your chart? It is the GT indicator. So this one, GT recent high low. And it just enables me, helps me to see the breaks of the highs and the breaks of the lows. Nothing super fancy. It's from my old strategy. That was purely technical analysis. So I should probably stop using this indicator if I'm being honest, but I still have it on. Waiting for silver to pull back. What's your take on that? Yeah, so we went through that. Definitely looking for a pullback. Looks like we're not going to get it. Looks like silver is going to do another explosion higher like it did here. So I know I was hunting for an entry during this huge uptrend. Never got it. So looks like it's just a repeat of that market environment. But hey, you cannot catch them all. Hello, Sluggy. Welcome to the stream. What are the top 3 assets fundamentally best to trade right now for intraday, swing trade? Well, I would say NZD/USD, in my opinion, has a big bullish bias behind it. Gold, bullish bias. Silver, bullish bias. A lot of inflation is coming. Inflation is bullish for gold, bullish for silver. Stock market right now, not in the best position. So stock market looks to be pulling back a bit. The Santa rally does not seem to be working right now. So my top 3 picks is going to be NZD/USD, gold, silver. Edge finder, let's see. If we filter for very bullish and very bearish, looks like there is nothing that is very bearish, but I would say, okay, NASDAQ is very bullish, gold is very bullish. Yeah, for the NASDAQ, I would be a bit more patient. I think we could see more flat price action, maybe even a bigger pullback. So we could see this or a bit of a bigger pullback. I'm not that bullish at this moment, but gold definitely fits the plan, fits the reading of the edge finder. You can also look at things that are bullish or bearish, but I just mentioned the things that I personally like the most. If you ask me about crypto, for example, crypto is doing nothing. If Bitcoin is below 100K, I'm not going to be interested. For Bitcoin, I needed to go back above 100K because the 100K is a crucial technical level, crucial psychological level. We are now in the bearish part of the halving cycle, so I'm just being careful on crypto. This is the last opportunity to get on the DXY train before 95. Okay, so it looks like the DXY to 95 idea has spread. It all started with Ballout, who is a member of the A1 Discord, if some of you don't know. But looks like the idea has spread. In my personal opinion, for the DXY to hit 95, you need something crucial to be broken. I just don't see how we can get so much selling without something being broken. You can then say, well, look what happened here. Massive, massive crash. Look what happened there. Well, this was Trump getting into office. This was Trump in office. Tariffs, crazy tweets, crazy announcements. So unless Trump comes back in and does something crazy, I just don't see what is what would be the reason. Just a second. I just don't see what would be the reason for the sell-off. You have to also note the big players, the whales, do they want to be short on the US dollar? No. Being short on the US dollar right now is expensive. The swaps, the carry trade, it's expensive. You don't want to do it if you don't have to do it. And they don't have to do it. Especially since I personally believe that the Fed is going to be more hawkish in 2026 than most people expect. So that's my take. And also, I see a lot of comments about the XY going to 95, which means most retail traders are bearish on the dollar, which means I want to do the exact opposite. So sorry about that, but I do use the comment section as a good reading of what the retail thinks, essentially. And just to note, this comment section may not be the best to do that because you guys are pretty familiar with trading, but Twitter is a good thing to look at. YouTube comment section, like in general comments, not the live streams. That's a good thermometer for the bias. And people are very, very bearish on the dollar. Marco, the DXY is falling all the way down. Is this Ballout with a different account? Maybe Ballout created a new YouTube account. Why is the NASDAQ falling? I just think there's a rotation. People are sort of starting to doubt the AI story a bit. There's a rotation from technology stocks into some other stuff, some other stocks, healthcare, energy, stuff like that, retailers. So you can see Oracle, which is a big technology stock, very bearish. You can see Nvidia, not doing so well. So generally, AI stocks don't look so great. Let's check out Google. I think Google is actually doing well. Alphabet. Yeah, overall, definitely Google is doing awesome. But there has been a bit of red lately. And also because the S&P is kind of flat while the NASDAQ is going lower, or at least had a bigger bearish leg, you can definitely see a rotation from technology into other sectors. So there's just some fear around the AI story. That's what I'm seeing. GP and NZD, pound Aussie paid out nicely. GP, CPI came in ultra soft. Awesome. So congratulations on those trades, Sluggy. NZD CAD seems discontinue the buy, looking good. No, I wouldn't touch NZD CAD because I think the CAD is getting stronger. So I think the CAD is getting stronger. I'm already bullish on the New Zealand dollar, so this is not a good currency pair in my opinion. Both currencies are bullish right now. Okay, let's see. What else do we have? Okay, so I do have 2 more minutes. I can see a lot of EJ. Euro yen. Euro yen, euro yen, euro yen. Let's do it. Euro yen. Anything connected to the yen right now, I'm being patient. We can get a big shit show, you can say, in one day because you have the BOJ. So anything that's connected with the yen, I'm being patient. I'm not sure if they will actually hike rates or keep the rates the same. If they do hike, and there's like a 80 or 90% chance that they will actually hike rates, yen will go up. Yen should gain some value on that news, which means EJ goes down, AJ goes down, NJ goes down, UJ goes down. No matter if the euro is strong, the Aussie is strong, especially Aussie, like AJ or Aussie is strong. Like the RBA, Australian Central Bank, they have flipped from also being dovish to now being hawkish, I believe, which is bullish for the Aussie. So even though the Aussie is strong, the BOJ is so important that we can still see the price go lower. That's why I want to wait things out. I want to be patient this week for the yen to see what will happen here. Okay? If we actually get a hike, we can be done with it, and then we can reevaluate, and then maybe I can take a position on the yen. So my best advice, be patient, because most of the professionals that I follow are patient going into that event. So that's it from me. We have Alan coming up. Thank you very much for watching. You can catch me tomorrow. I will be live streaming. Good luck in the markets, and watch for the BOJ. It can get rough. See you. Goodbye.
Hey, stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Good morning, good evening, good afternoon, everyone, wherever you guys are watching. I'm super happy to be here. I was listening to Marco's segment towards the end. I actually agree with him as far as his positioning for DXY, as far as like his directional bias for it. He was mentioning how DXY could potentially be an overcrowded trade, and I believe that the same as well. I think, overall crowd sentiment is still heavily bearish, the DXY, and no, rightfully so, right? The fundamentals do point in that direction. However, we are seeing on the Edge Finder, we are seeing some of the top contenders falling off a bit here. I remember we saw euro dollar was like a 8 score, Aussie dollar was an 8 score as well, New Zealand dollar. Now they're starting to fall off a bit. We do have New Zealand dollar still up there at bullish with a 5, but seeing that slight change here is kind of signaling that perhaps we're running out of some steam as far as the DXY bearishness. Now that's not to say that it can continue going lower, especially with CPI. If we get a low CPI print, then perhaps we can get a similar reaction to what happened with Bank of England this morning. So Bank of England was struggling with some sticky inflation, and they made some pretty good progress, actually. We saw them drop down to 3.2 from 3.6. So heading in the right direction. Markets did price in a little bit of more easing for the Bank of England. And so that was kind of like the bigger catalyst here overnight that I saw. I made a post about it in the Telegram channel. Definitely go ahead and check that out. I try my best to go ahead and just showcase the 2 most imperative charts of the day, to kind of just make sure that you are informed with what you need to know. So essentially what happened around 2 a.m. or 1 a.m. my time, Bank of England went ahead and CPI print came out cooler than expected, and that was a green light for the Bank of England to go ahead and cut rates. So we did see a steep drop. It dropped like 0.80% around there, yeah, 0.81. And so now we're continuing lower. I draw this trend line here this morning, very very fresh here. But I noticed this, we're in this upward trend line, and now we're trading now below it. We trade pretty convincingly down below it, and now we are somewhat of a retracement back. So perhaps if we get something like this, then that is a green light for further depreciation in the pound in the very short term, right? But that's still up in the air. CPI is going to be a big decision factor for that, especially given that currencies are trading in as far as relative strength. If the dollar is significantly weaker than the pound, then the pound will get some kind of a lift off on that. So we'll see. We'll play that by ear. But interesting development there. And it seems like a lot of other currency pairs, major currency pairs, are somewhat cooling off a bit. You see that Aussie dollar was now at this level of support where I wanted to go ahead and pick it up for longs, right? Technically speaking, this is a fantastic idea. However, I'm going to use discretion, and I'm going to be patient on this idea and wait for CPI. I think if we can allow the Aussie dollar to go ahead and stall here, which is very probable, a lot of assets, they go ahead and consolidate it and trade very thin before an important news release. Depending on the outcome tomorrow, if CPI comes in cool for the US dollar, you add that into an RBA that is hawkish at the moment, that is a good probable cause for the Aussie dollar to go ahead and lift off. And so what that would look like for me, guys, is that I'll just go ahead and put this tool out here to showcase something like this, right? Don't really care if I get filled at this exact price, but just want to be in this general area. Stop below this level, and then just targeting this recent high here. Very short and sweet. Now, if we do get a hot CPI print in the US, then we'll go ahead and flush lower here. And then I'll most likely stay out of it. I won't trade it just because I'm in a long-term dollar Swiss position. So I don't want to be too heavily positioned in one direction, because that's more of a correlation play. If I'm going long Aussie dollar, or if I'm going short Aussie dollar, long dollar Swiss, I'm technically in the same position. So I don't want to be too heavily exposed in that direction. Alan, do you also offer signals? I do not. Should I buy New Zealand US dollar? Not financial advice, Eisen. However, we are kind of extended here, right? Some currencies are cooling off. I think the logical play would be to wait for CPI tomorrow. A lot of emphasis has been on the US at the moment, just because we had that green light from the jobs market cooling off a bit, right? Weaker labor data does go ahead and promote further easing. However, if we get a hot CPI print tomorrow, that can kind of question or contradict that a little bit. So that can throw a little bit of a wrench into the idea of just going short dollar straight up. So I would wait for that. However, if you do get a super cool CPI print tomorrow, Eisen, New Zealand dollar is at this level, perhaps that'd be a good thing to go ahead and go long. But I really don't know. We've been trading here for some time now, so I was trying to trade New Zealand dollar actually down to this 5,500 level. That's like, if you just scroll out here a little bit on the daily time frame, super discounted to level. It's been respected multiple times. 1, 2, 3, 4, potentially 5 if we get there again. So that's kind of my idea for New Zealand dollar. But again, I'm kind of hands off at the moment. US oil selling hard recently. That's good for fighting inflation. Correct. So if you think about it, gasoline, right? A lot of goods and services, especially like groceries, things like that, they move via truck in the US. So if the price of oil is down, the price of gasoline is down. And so that transportation cost is going to be lower. And that's good for overall, goods and stuff like that. So yeah, lower US oil generally is good for inflation. And, oil has been pretty much, at this level for some time now. So perhaps that can show tomorrow in the data, but we'll go ahead and see. I can't predict it. I don't know for sure what the CPI print is going to be. No one knows. That's the uncertainty aspect of the market, and you just kind of have to accept that and take a more reactive approach, I would say. So hello, Eisen. Hello, Bashy, of course. Max, the regulars, Sluggy. what I think about pound New Zealand. So New Zealand has been somewhat hawkish, and pound obviously is now kind of getting the green light for more easing here. Let's go ahead and look at the pair as far as technicals go, and then I'll look at the edge finder as well to get a better understanding here. Technically speaking, here we're in an uptrend. I'm gonna go down to I'm gonna go to the weekly time frame. It's kind of a straight up move. I mean, honestly, if I just draw a line here, and trend lines are subjective, so take this with a grain of salt. This is not a set in stone thing, but we're in an uptrend here. I mean, I would say if the fundamentals lean towards some New Zealand dollar appreciating and the pound continuing with that rate cycle, then perhaps this can be a good play only if we go ahead and get a flush below and start staying decisively behind this or below this trend line here. But let's look at the edge finder to see a better picture here. Give me one sec. Top setups. I like the eco personally. I'll explain further here, but let's see. We're just gonna isolate these. We're gonna go miners only just to make my eyes not work too hard. New Zealand pound. Where you at? Guys, I don't see it. But it's very possible that my eyes are just wonky. I don't see it. And if I don't see it, honestly, then I would probably ditch the idea. Just because, I want to trade with the macro, with the flow, with what makes sense. You don't want to swim against the tide. So I don't think I see this on my screen here. So perhaps I would just ditch that idea altogether. Oh, and I was going to explain why I use the Eco tab. When it comes to, the top setups page takes in consideration a lot of things. Technicals and the sentiment is one thing that takes into account as well as the actual economics or the macro picture. But the Eco chart takes only into account the macro. So it excludes the technical aspect of it and the sentiment aspect. Now, the technical aspect is pretty good, but it depends on your time horizon for a trade. So if you are, very short term or shorter term, which I think a lot of the crowd is, in fact, if I can get a gauge as to where the crowd is leaning at as far as what your time horizon is for a trade, like, are you guys trading intraday? Are you guys scalping? Are you guys swing trading? I'd like to know, that way I can better explain this. But the Eco chart only includes the macro fundamentals. So the technical or the top setups, the original one, includes the technicals as well. And the way it gathers that technicals, if I'm correct here, it takes into account like the moving averages and stuff like that. So if you're more intraday, short time horizon, then it can take longer for those technicals to really shift, right? Especially like if you're like using the 50-day or 20-day, can take some time for an asset to kind of fall below or make a significant shift. So I like the Eco because it allows me to just only understand the macro, and the timing and the trend, all that aspect is all in my court. So I can make the determination as to, do I think it's technically strong or not. So that's kind of why I like the Eco charts as well. So yeah, I would recommend it if you are like a shorter term trader. Definitely use this chart. I like it a lot, actually. What are the top 3 assets fundamentally best to trade right now for intraday? Top 3 assets trade on fundamental base, no technical included. Dude, that's a great question. I love that question, Johnny. I think everyone should ask that question. So you should always trade what's in play, right? You want to ignore the stuff that's stale, that's not really moving that much. So top 3 assets, I would say, you're saying not including technicals. This is a little hard. So let's see here. Top 3 assets, I would say, is the most ones to give you opportunity would be anything yen, right? So Bank of Japan is looking to hike rates. If they do go forward with that, then that will definitely inject some volatility into the market. So anything long yen, if they hike rates, if they don't hike rates, I would kind of just ditch that idea altogether. Aussie dollar is fundamentally strong at the moment. RBA is done. Excuse me. RBA is done easing. They're looking to hike rates further. So that would be a great play, in my opinion. New Zealand dollar is also in the same camp as well. Those will be my top three: Japan, Aussie, New Zealand, and I trade currency, so I'm kind of staying within that those boundaries there. But as far as other assets go, which super popular, Nasdaq looks really well. We're just extended. I think that we have further upside, especially if we get some kind of a retracement lower in equities. Then that's a strong play, right? AI is it's definitely efficient. It's helping, right? It's gonna create efficiencies and everything like that. So it's not like 2008 where housing was just a leverage on just fake hopes and all that good stuff. Like the AI is a real thing. So I would like this play if we do get some kind of a deeper retracement. It may be scary at the time. It may be frightening to want to go ahead and participate when you see something like the Nasdaq falling, but I think longer term that'd be a good pickup if you do get an opportunity like that. Any tips working as a trader in JP Morgan? So just for transparency, I wasn't on a trading floor, trading desk at the bank. I was more on a wealth management team. So we were more long term, definitely take into account the macro and the fundamentals. There was no like technical aspect or anything like that was taken into consideration when dealing with clients. It was actually the two variables were uh, what is the intention for this money and what is the landscape and how can we fit an investment to match your intention. So if a client was like one of the things we did a lot was when rates were at peak rates, a lot of clients really love like CDs and tying the money up or money market accounts, things like that. But then as rates were starting to come down, they wanted to still take advantage of higher rates, but they also didn't want to sacrifice liquidity. So a lot of clients that wanted to be semi-liquid, we just put them in like T-bill ladders for like short expirations, and they mature every they mature staggeredly, so they can still lock in like above 5% rates and still have some kind of a liquid aspect to it, where every couple months, whatever, the ladder will mature, and so you can go ahead and still use your money and still take advantage of high rates. But we did that because rates were coming down, and we wanted to still lock people in, and CDs and money markets were starting to follow suit with the rate cuts. So that's kind of what we did. But yeah, we took into consideration macro only, and I was pretty spoiled right there because I had a lot of insight, and whenever I went solo, I had to do everything by hand. So you could imagine, you know, finding out what's going on in Europe and then having to find out what's going on in the US and then match that and find a net outcome. Like, is it net positive, net negative? And then I discovered this product, Edge Finder here, and then that helped me a lot. Like that's a super time consuming task, and so that's why I kind of gravitated towards it, and it's helped me a lot. I mean, it's made me money, so I stick around with it. It works for me. So I would recommend it to anybody. I would say, like, if you're not going with the macro, the fundamentals, you're swimming against the tide, and sometimes that tide is stronger than you think. So it can really you can end up in a bad spot. But aside from that, let's see, what else would you guys like me to look at here? Bank of Japan last two hikes was bearish for yen. Yeah, a lot of the times the move is already priced in as well. So we're kind of seeing that with the bond market, or the yields in the Japanese 10-year yield. We're super elevated. So we're definitely expecting that. So if we don't get that, if we don't get a rate hike, you will definitely see some volatility either way, whether we hike rates or don't. You will definitely see some volatility with the yen. So I like to gauge yields when it comes to currency movements, right? You can see the US 10-year yield, which is this one here. It's actually coming down a bit. We're still hugging around this level here. I would like to see more of a decisive break below. When it comes to the Aussie yields, look at that. Hawkish RBA yields are staying above here. So that's a great thing. If you look at gilts, early in the year we were hovering around 5%, right at that very, very peak, and now we are kind of trending down below. So from the highs of that 5% when everyone was freaking out up in the UK here, we're now down some 9% there. So that's good for the Bank of England rate cut story, especially now adding that the CPI came in cool. They have the green light to continue easing. If we do see, as far as the the yields kind of fall below this level, just random technicals. If bond market, it's a different animal here, but if you get yields trading below here, right? And I'm not looking for any specific patterns or anything like that, but just trading below here and not popping back up and elevating in this area. If you get yields staying below here, then the rate cut story for England stays alive. If you get a pop here and they start trading continuously back up here, then that means market's calling bluff on further rate cuts. Nas bears are paying. We'll see how that one goes. I think when it comes to Nasdaq and anything U.S. denominated, we're waiting for CPI. CPI can definitely contradict the whole narrative of continued rate cuts. If CPI comes in hot, then the Fed has a decision on inflation or labor. The 2 rate cuts are already priced in. We already got the one here in December, so we'll go ahead and watch for that. I'm looking for S&P 500 for a little bit deeper pullback. I have a setup on that 4-hour demand zone. So if the valuation data is undervalued on a daily time frame, it would really be a good setup long. Yeah, like I said, equities. This is my first line here, area of interest for equities here. If we get to the 24,000 level here on the Nasdaq, that's a good level of support in my opinion. For the S&P 500, it'll look more of like that 6,700. Which we're pretty much already there, honestly. So we'll see how that plays out. But again, I don't want to act prematurely. I would definitely want to wait for what the rate cut narrative looks like after CPI. What is likelihood of CPI? I wish I could tell you for certain, man. If I did, I'd have a pina colada in Cancun right now. I would go full on out leverage and just wait for it to hit the tape. But no one knows. Right now, the expectation is I'm just referencing financial juice here. CPI is expected to rise a little bit. So we're expected to go to 3.1 versus the previous 3%. Month over month is staying flat there. Year over year, flat as well. But just regular CPI here, year over year, is expected to rise slightly. So that's why I'm kind of throwing this thing out. If it comes in harder than that, that's just because what I'm reading and what I'm getting engaged for. But to be honest with you, I don't know what it'll be. Take a look at Euro US dollar. What do you think? Euro US dollar was showing some pretty good relative strength for a long time, actually, and it's throwing some weird candles here on a daily time frame. But we did get a very nice break above. To Marco's point, right? The DXY short was a very crowded trade, and we just had a monster run up here. So perhaps what you're seeing a little bit is some profit taking happening at this level for sure. And now, we're kind of just sitting here, right? We're been pretty flat. We had some kind of a flush lower here, but not crazy. Like the move itself was from low to high, or from high to low, whatever you want to call it. Oh, well, actually it was 100 pips, right? So ATR on the euro dollar is, I believe, 70 pips. ATR is like 70, 80 pips on the euro. So regular day there. But yeah, we're pretty much trading there. As far as actionable steps, to answer your question, Melissa, if we do get that hot CPI print, then perhaps euro dollar does break below, and the easiest target would be, and the nearest one would be somewhere right here. So somewhere around this, what is that? 16.8 is what I would be looking for. And if we get a break above, if we get CPI in the US come in cool, then that will probably give some further appreciation for the euro. And then the easiest target would be just the recent highs. We did get to that 1800 level, and then we flushed below. So that would be a target. So if we do get hot CPI in the US, trade it lower. Cool CPI, trade it higher. Clean and simple. Johnny boy, yeah, no worries, man. So Bank of Japan here, they're looking to hike rates. That'll cause some kind of a disruption there. Interest rate divergences or interest rate differentials will definitely narrow across the board there. So what a lot of people do is they arbitrage and they borrow money in cheap yen, and they park that money into higher yielding assets. It's been a play for a long time. A lot of institutions and big money players do that. If the Bank of Japan does raise the rates there, then then you will see a lot of appreciation for the yen, I would say. And then as far as for the pound side of things, because we're looking at pound yen is what you're asking for, uh, Bank of Japan or Bank of England is now in the has the green light to go ahead and continue lowering the rates. Now, I don't trade yen pairs. The only yen pair I trade is the dollar yen. So as far as the price action goes, I mean, we've seen this monster trend up, and that could stay. When it comes to these yen pairs, is that they're super volatile. And what I would prefer to do is wait for a very, very obvious switch in trend, like technical on the higher time frame type of shift. That's what I would do for the yen pairs. But I really don't trade them actively, so I really don't want to guide you in the wrong direction. But as far as the fundamentals of it go, we do have a Bank of England that's needing to cut rates, and we do have a Bank of Japan that's looking to raise rates. So that right there in itself does kind of lean towards a downtrend in pound yen, but it's just a matter of waiting for a very clean, obvious shift in the technicals for it. So perhaps if we break below this trend line and stay decisively below it, then you'll go ahead and that'll be a good play. Do you take any forward guidance trades as far as like after forward guidance is given? Yes, definitely. One thing I did during that Fed day when we got somewhat of a dovish tone is I took a very quick stab at Aussie and Euro, and Euro was break even. Aussie dollar was good one, but yeah, that was just very very short term thing, very discretionary. That was just a matter of listening to what's going to happen or listening to the words that were being said, watching yield and kind of getting a grasp for a very short term type of thing. Suggestion for break even week trader: always give back gains. Eisen, believe it or not, if you're break even, you're in a really good situation. So pat yourself on the back. Don't beat yourself up. Break even. You didn't lose anything. A lot of people in the markets, the statistics show that trading is a very difficult arena to be playing in. And if you're break even, then you're doing pretty well, man. So just go ahead and break down and look at what you did before. If you can spot some mistakes, try to be better. Write it down. I like to journal, so I have a journal right here next to me, and you just write everything down, man. And so just reflect on it. But break even is actually a very good thing, man. So congrats to you. You're doing pretty well. Don't beat yourself up and just improve. Any other questions for me, guys? We do see UJ getting a little bit of a, I would say, popular, but it's really not doing much. It's just staying within this channel. So I'm going to scratch that. But yeah, UJ consolidating here a bit, just waiting on that Bank of Japan decision and also US API. So both sides of the coins are having some very important data coming out soon. Let's see what's going on. VIX is low. Actually, I want to see what Bitcoin is doing. Bitcoin has been flirting around with this 92 lower or 85s area, not doing too much. I would actually be curious to see how sensitive Bitcoin is if we do get a Bank of Japan that does hike rates. A lot of people, what it seems like is happening is that arbitrage opportunity that I was talking about earlier. They go ahead and borrow cheap yen, park it into higher yielding assets. Bitcoin is a high yielding asset, right? It's very speculative, but it's very high yielding. It's been on tear. And so I'm curious to see how sensitive Bitcoin is to a carry trade unwind. We did see whenever that initial headline hit that Bank of Japan was looking to raise the rates, we did see a flush lower in Bitcoin. I want to see what happens if Bank of Japan actually does hike the rate. I want to see what Bitcoin does to it. I want to see if it's not just a fluke, but if it's really, somewhat correlated to what's going on with arbitrage and everything like that. And if they do hike rates, I want to see how low this thing actually can go. But my first line of opportunity would be that 70,000 level. It was previous resistance. We popped, we came back down. It's support. So I want to see if it's going to continue acting as support or if it just completely ignores it and just flushes right back lower. Are you looking for CAD longs? I would be, but also like I was talking earlier, I think the dollar short trade is very overcrowded at the moment. Now, I could be dead wrong if we get CPI that's super cool tomorrow, and then then take what I say and take it with a grain of salt here. But I do think that CAD is actually performing pretty well. They had a very bad labor uh, environment, and they're kind of coming back from that as in growth as well for the Canadian dollar. So I don't really have a great trade idea for CAD, honestly, to be frank with you. This level was ideal for me, and we flushed below it, and we kind of still traded below it. So it's a matter of we could potentially go even lower, to be honest with you. So don't really know too much about the CAD. One thing I would say though, as we kind of end the stream here, take a look and join the Telegram channel. It's completely free. I would advise very much against it. We also drop bonus clips as well, so snippets of good takes that is on there as well. And then also too, we do have polls every day, so little quizzes to kind of just keep you refreshed. And I try to make them surrounding what's going on. So yesterday was about NFP, or the day before NFP was kind of just preparing everyone for it. So definitely take a look at the Telegram. Stay sharp, stay fresh in what's going on in the macro. And yeah, we wish you guys a blessed rest of your day. And like always, trade safely, guys. Bye-bye.
Thank you for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want to get put on the nice list this year? Then make sure you check out the A1 Stock Box. That's all for today, everyone. We'll see you tomorrow. Ho, 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 ho.